CA Rachna Ranade here, and I welcome you all to a very special video. Now, why special? Because I feel that every one of you watching this video ideally have at least one stock from the IT industry, and since the last 1 year, you are definitely going to be like, when are IT stocks going to go up? Because since last year, if you have a look at this, the IT index has gone down by almost 20 plus percent. So those who want to understand not only about the industry, not only about the economy, but if you want to understand this specific sector, going into a little bit more details, wherein we are going to talk about one specific stock as a case study, then please keep on watching the video till the end so that I'm sure you'll get a lot of insights about this specific industry. Before we move on, I would want to give a big thank you to Amarnath and Ashutosh for their wonderful comments. So, like I discussed just now, the case study that we are going to take up today is of Infosys, because if we understand about one big IT company in detail, then ideally we can try and generalize our observations for other big IT players as well, right? So, first and foremost, like I said, this entire IT index which went down by 20%, is it because of the recession fears? Is it because of the news of big tech layoffs and all that? Is it because of certain macroeconomic factors, something like high rate of inflation, low GDP growth rate? Is it because of the problems that are persisting in countries like UK and US? I'm sure there are a lot of questions to be answered. So let's go through one by one. The very first thing is that we'll try and understand the position of US and UK from the macroeconomic perspective. Just in case if you are confused as to why are we talking about US and UK, for that you can have a look at this chart. You will be able to see that whatever revenue Infosys generates, out of that 61.3% of the revenue is generated from North America. I'm talking about this year. Blue one indicates the previous year, right? Europe is 24.2%. So if you just calculate addition of America and Europe, that counts almost for what? 85% of the total revenue of Infosys, right? India is just that 2.9%, small bar graph. So we have to understand what is the overall macroeconomic scenario in which two countries, Europe and America. So for that, first let's check what is happening in Europe. If you see here very clearly, there is no degrowth as such in the GDP, but you can see GDP is very, very flat. Could that be a cause of concern? Ideally, yes. Number two, if I talk about USA, if you see here, there were 2 quarters back to back wherein we saw negative GDP growth rate. But coming to the latest quarters, you can see there is no negative GDP growth rate, but the growth in GDP is not that great as well. So, all in all, if you understand from a bigger picture, from a macroeconomic picture, US doesn't seem that great, UK doesn't seem that great from the GDP perspective. If you are already watching my Thursday live stream, you know what is the scenario about inflation. You also know that a major chunk of Infosys is coming from these two countries, right? The companies from these two countries. With that, tell me logically, should their revenues have gone down or should they have gone up? Ideally, they should have gone down. But then, what does the situation look like? Let's have a look at this in the immediate next section of the video. Chalo, so economy analysis, understood? Very nice. Now let's understand about the quarterly details. Okay. Now, ideally, as I said, revenue should have dropped, right? So for that, have a look at this. Oh, ho, ho, ho. If you see, we are focusing only on 2022 because the overall sentiment that I was talking about, recession, this, that, US, UK, that has been the talk of the town or talk of the country, I think I can say, for the last 1 year specifically. So I've considered only last 4 quarter details, that is, you can see March, June, September, December, all for 2022. How is the case for sales? You can see sales has grown from 32,000 crores to 38,000 crores. And if you see for PBT as well, PBT has grown from almost 7,500 crores to 8,931 crores. So can I say the quarterly data for top line, that is revenue, and bottom line, that is profitability, everything has increased? Ideally, answer, I mean, we can see here, right? It's yes. Now some people might say that this increase in revenue could be because of the rupee depreciation. So for that, we have to understand one more important term, that is called as the CC growth, that is the constant currency growth. Just in case if you don't know this term, we have already covered all these terms like constant currency growth and a lot more in this video. So if time permits, whenever time permits, you can have a look at this. If you already know this term, very good. Let's continue with the video. So constant currency growth at the company level, if you see here, you can see that 13.7% YOY growth you can see here. And even if I'm talking about the QOQ growth, it is 2.4%. You can see for North America and Europe, which were the two major continents that we discussed, from where maximum revenue is generated. Maybe in the previous section of the video, I said North America and Europe as countries. Of course, they are continents, right? Maybe slip of tongue or tongue of slip, whatever. So here you can see for North America, the YOY growth in constant currency is at 10.5%, and for Europe, it is 25.3%. Basically, if we look at data, there is no problem anywhere, right? Now, if I were to check for client data, we have to understand that whatever numbers we are getting from the client, whatever revenue is being generated from the clients, are the clients increasing or are they decreasing? And for that, have a look at this chart. You can see across the board. Acha, I'm going to compare YOY, right? So I'm going to compare 31st December 22 as compared to 31st December 21. You can see total number of active clients, they have increased. Number of clients added during the period, of course, has increased. Now, if you look at the $1 million clients, so all the IT companies typically classify their clients as $1 million plus clients, $10 million plus clients, $50 million plus clients, $100 million plus clients. Just for your understanding, the interpretation of this, for example, $100 million clients means what? Any single client which generates more than $100 million of revenue for the company. Okay. Now, if you see here for 31st December 21, it was 37. So Infosys had 37 such clients which were generating individually a revenue of $100 million plus for Infosys, right? Now, has this number increased or decreased? That has gone up from 37 to 38. Even if I'm talking about $50 million category, it has gone from 64 to 79. The previous category 274 to 294, upper 80, 854 to 9. All in all, I can say that across the board, the number of clients which are generating these revenues, they have gone up, even if it is from a YOY basis. And I think just barring that last 100 million category, for QOQ basis also, it has gone up. So I think the numbers are definitely not speaking whatever the economy analysis was speaking. Now let's try and understand what was the key highlight point of the management commentary. Now, management said that they have done 32 large deals this quarter, which is the highest number of large deals done by them since inception. Now, you might be like, out of this 32, how much have come from Europe, how much from US? Ideally, majority should have come from India. Now, for that, let's have a look at this split. Oh, ho, ho, ho. 25 out of these 32 have come from America, 5 have come from Europe, and balance 2 is also rest of the world. So now if you ask me, is this data also worrying? Answer is no. Then you might be like, this chart that we saw in the beginning, wherein the entire IT index has fallen down by 22%, why has this corrected so much? Because right now we said economy, all seems good. If you looked at the quarterly numbers, everything looked fine there. If you looked at the management commentary, that also had some positive points. But then we have to look at two more parameters. Which are the two more parameters? We have to look at the valuation, and we have to look also at the technical analysis. And maybe after we look at these two parameters, we might get an answer to our question as to why the IT index has corrected by more than 20%. Now I'm on screener.in and I'm going to go to the chart. Here I'm on PE chart, right? Generally this will be the default price. Now we are going to go to the PE chart. I would want to just focus only on the P ratio here. Okay, now if you see a pre-COVID level, right, this left side of the screen, you can see that their P used to be in the range of what? Lower side I can see 17. So here also you can see March 18, 16. Then here you can see 17. Here also you can see somewhere around 15, 16. And the upper end used to be somewhere around 20 to 23, right? So originally pre-COVID level, the P was in the range of what? 17 to 23. And after the V-shaped famous recovery, what happened after that? The P started going up to what? The highest level it saw was around 38. Since then, so anything which has gone up terrifically will have to, correct a little bit. That there has to be some sort of retracement. And here from almost, end of 2021, you can see that P started correcting, and right now we can see P is around 28. Now, if the P were to go back to the median P, see this gray dotted line, you can see that is the median P. What is that? That is at 23.8. So from 28.6 to 23.8, if it were to go back to its median P, we cannot rule out another 10 to 15% correction in this stock. Okay, will it happen right away? We don't know about that. But we will have to wait and watch. I don't think it is a good idea to hurry in and buy the stock. People say that already it has corrected so much, then from here it has to continuously go up. So we have to understand this point, that the median P is still a little bit lower. So it will be better to wait and watch a little bit and then take a final decision. But this was just about the inputs on valuation. Now let's focus on the technical analysis for this stock. So I'm on a weekly time frame of Infosys, and here we have the corona lows and here we have the highs that we saw before the fall started. So first things first, we have to understand by what percentage has Infosys gone up from the COVID low till the high point, right? So this is almost 300% rise. So do you think that 300% rise will directly be followed by another 300% rise? So ideally there has to be some sort of retracement. And how much is the retracement? So for that we'll have to check out our Fibonacci tool, and I'm going to touch the highs, the lows to the highs, and there we go. Okay, so here we can see that after we saw the high point, from then it started going down. It took its first good support at around 38.2 retracement. Okay, from then it went up. Then the 23.6% ka retracement actually started acting as a resistance. Again it went up to 38.2 retracement, again went up to 23, again here. So basically it's going range bound from the 38.2 retracement to 23.6 retracement. So ideally if it were to go back, and my chart is gone, no, it has come back also. So if it were to go back from the 38.2 retracement to 23.6% retracement here, so I'm just drawing a line here and I'm drawing a line here, then how much fall would that be? Let's try and count it. So from here to here it will be a fall of almost 15%. Okay, so right now if you remember in the valuation I said somewhere around 10 to 15%, and I have not drawn the lines very neatly tidily, right? So around 10 to 15% looks good from the valuation perspective, correction I'm saying. And if I'm talking about TA perspective also, somewhere on a higher side 15%, I don't think it should fall more than 15%, right? Plus one more point here, you can see there was a gap down. I'm just trying to zoom in now. This one, there was a big gap down here, and this same level that I drew right now, that is also acting as a resistance. So I don't think it will be a great idea to jump into this stock before it either breaks above this, or better way, if it comes down till here, what I'm going to do, I'm going to add a minor chunk of my targeted whatever number of shares in Infosys. I would want to wait till this level correction of almost 12 to 15%, and then I would want to add some quantity in this stock. Alright, I think the first three parameters were ticked off. Now these balance two parameters are also ticked off. So you have understood about Infosys in absolute detail. We said that worst case scenario, I personally feel that a correction of max to max 10 to 15% from here is what is the worst case scenario. But then the big question is that when would be the time that this stock or this entire space starts to gain some strength and starts moving upward? I personally feel that it's only the fear of recession that is still trying to hold back this entire pack, and I personally feel that this fear of recession we should be able to overcome in a matter of another 4 to 6 months. Of course, markets have the full authority to prove me wrong, but that's what my thought process is, and that is why I thought of telling this to you. I hope you found some value in this specific video as well. If you did, please don't forget to hit this like button. Don't forget to share this video with your friends. And if you want to know more about what's wrong with Jubilant FoodWorks, you can click here. If you want to know more about if you can get insurance for your parents, you can click here. Till then, take care. Jai Hind and bye-bye.